What's up, winners? Today we are going to be talking about the best place to store your money, and I'm going to be doing it from a tree. Why? Well, hopefully it'll be a little bit more entertaining that way. The way I'll structure this video is first I'll talk about the similarities between banks and credit unions, then I'll talk about the differences between them, and then I'll give my unprofessional opinion on which one I think is better. Alright, so we'll start with the similarities. You can go to either a bank or a credit union and find basically the same types of products and services. You can open checking accounts or savings accounts, money market accounts at either one, and you can also go to both for products like home loans or car loans or small business loans. They also offer similar methods of using these products and services like teller lines, drive-ups, ATMs, and online banking. Another similarity is at both of these kinds of institutions your money will be insured, up to $250,000. At banks it's through FDIC, at credit unions it's through NCUA, but both accomplish the same purpose in that your money is safe there, and that's more than anybody should reasonably need, because once you get anywhere close to $250,000, most of it really should be in other more high-yielding investments, but we'll talk more about that in a later video. See that? That is my script. Nice. Alright, so I thought we were going to do the whole video from the tree, but I had to come down here to get my script, so maybe we're just going to roll with the punches. Alright, so this still counts because there's a tree in the background, right? Alright, so the most fundamental difference between banks and credit unions comes down to ownership. Banks, like most companies, are owned by their shareholders. They're a large group of investors that all own really small parts of the company and dictate the decisions that the company makes based on how many shares they own. Credit unions, on the other hand, are owned by their members. So anyone who has an account there gets a vote in who gets to go on the board of directors. Another key difference is size. Most credit unions you'll come across are local or regional, although there are a few national players, but most banks that you see are part of large chains, and the largest chains actually make up 59% of the banking sector, with the largest players being Citi, Wells Fargo, Bank of America, and Chase. The last difference is membership criteria. Most credit unions have some sort of eligibility requirements that you have to meet that are usually geographic or demographic, although at some of the larger chains the only requirement is paying a $5 donation to the organization. But at most banks, pretty much the only thing that will normally disqualify you from opening an account is a suspect banking history. Okay, so now that we have a foundation of what the difference is between credit unions and banks, now it's time for me to shamelessly gratify myself by giving my opinion as if it's important. Guys, there are a lot of financial topics that I don't really take a firm stance on, but as far as I'm concerned, this one is not even a contest. The structure of member-owned credit unions, I believe, inherently fosters higher accountability, better attention to detail, and better service. The board members of credit unions have a double incentive to do what's best for members. In one, they themselves are members, and two, they can easily get voted off the board by the members if they do something that is not in the best interest of everybody involved. While it is true that there are boards of directors in large banks, the dynamic is really different because the number of votes that you get is directly proportionate to the number of shares you hold. So the richest investors are the ones who have the loudest voice, people who own a couple shares have a really small voice, and account holders who don't own any shares in the company don't have any voice at all. By contrast, every member of a credit union gets exactly one vote, which ensures that even if you've got $2.34 in your account, you have just as much of a voice as anybody else in the company. This dynamic has led to significant benefits for credit union members, including average higher interest rates on savings accounts, lower interest rates on loans, and friendlier and better customer service. Okay, that last one is a little bit subjective, but I'm still convinced it's true. If all that is not enough to convince you, go check out the recent news for corruption at the highest levels of large banking chains. I'm talking Chase and Citigroup being involved in global currency manipulation. I'm talking about TD Bank lying to its customers to increase sales, and most notably, I'm talking about Wells Fargo stealing their customers' identity and creating 3.5 million fake accounts and then charging their customers for it. Guys, this is real, and it is crystal clear that these large banks do not have you and I's best interests in mind. All right, I need to step off my soapbox for a little bit here and acknowledge that there are some types of people who will benefit from large banking chains. The first type is, if you have a mobile lifestyle or travel a lot, it may be beneficial for you to have a bank that you know is going to be in every major city. The second kind of person is, if you love to be on the cutting edge of banking technology, the largest banks will typically be the ones who are pioneering that field, and smaller credit unions will normally follow sometime after. And my battery died, so here I am the next morning. So the last kind of person that a bank could be the best option for is if you live in a rural area and actually don't qualify for membership at any credit unions near you. A bank may be the best option just so you have something local to go to, although a lot of credit unions do have pretty loose membership criteria so that they can be as inclusive as possible. So you may be asking me right now, Caleb, if banks are so bad, then how is it that they attract and retain so many customers? Well, I think the answer is two things. One of them is they rely really heavily on brand recognition, so they have really large advertising budgets, and I think people naturally gravitate towards the familiar, and that really plays in their favor. The second thing is they know that switching accounts is really inconvenient. According to Bankrate.com, people stay an average of 16 years without switching accounts, so guys, we're married to these things, and I think the banks know it. So if you're watching this right now and are becoming convinced that a credit union may be the best solution for you, guys, take the first step and start now. Go against the crowds and do the research, go visit one. I really think it could be one of the best financial decisions that you make this year. Guys, thank you so much for watching this video. Today's community Q is this: where do you bank and what has your experience been so far? Let's get some dialogue going, share our knowledge with each other, and guys, as always, start now. Well, hopefully it'll be a little more entertaining that way. Maybe it'll just be stupid. Regional, though a few large chains do exist. Man, I need to enunciate.